Hello traders, investors, and crypto enthusiasts. Welcome to our channel, where we deliver deep dive analyses, hot news, and reliable projections about the blockchain universe, Web3, and digital money trends. Today, we were diving into a critical question posed by influencer at Kobe on X. What cryptos would you buy if BTC, ETH, SOL, and stablecoins were off limits? The responses from analysts, fund managers, and developers revealed a mix of Layer 2 solutions, privacy coins, AI-driven tokens, and even gold-backed assets as top contenders for 2025 to 2030. From Starknet to Chainlink, we'll unpack why these projects are gaining traction and how they fit into a diversified portfolio. Plus, we'll explore unconventional picks like SPX6900 and Robinhood, blending crypto and traditional markets. Let's break down the best opportunities beyond Bitcoin and Ethereum. Layer 2 and privacy coins, Starknet and Zcash as infrastructure plays. Starknet, Ethereum Layer 2 scaling solution, topped many analysts' lists. Unlike generic L2S, Starknet leverages zero-knowledge proofs to achieve 10x faster transactions at 10% of Ethereum's fees, making it a direct competitor to Arbitrum and Optimism. According to Auri, a seasoned trader, STRK's undervaluation, currently at $1.2 billion market cap versus Arbitrum's $7.5 billion, creates asymmetric upside. Its integration with DeFi protocols like Uniswap and AAVE further cements its utility. For hodlers, staking STRK offers governance rights and 8 to 12% APR, aligning with institutional demand for scalable EIP for 8.4 compliant assets. Zcash, highlighted by Mert, represents another niche, privacy-first value. While Bitcoin and Ethereum face regulatory scrutiny over traceability, Zcash technology enables fully shielded transactions, appealing to institutions like Goldman Sachs, which recently added ZEC to its crypto portfolio. Despite its $1.1 billion market cap, ZEC's 12% annual burn rate in halving in 2026 could drive scarcity, similar to Bitcoin's post-halving rallies. However, critics argue ZEC's low adoption limits growth compared to Monero, which has $3.5 billion TVL in private DeFi. For traders, ZEC's $130 support is critical life broken. It could retest $100, but a rebound above $150 might signal a $200 to $250 target. Real-world asset tokenization and AI Chainlink and Gitto. Chainlink emerged as a bridge between blockchain and traditional finance, driven by its role in real-world asset tokenization. Platforms like Frax Finance and Centrifuge use Chainlink's oracles to price collateralized debt instruments, attracting $12 billion in institutional capital. The Genius Act's passage in the U.S. Congress, which legitimizes stablecoin scoot, accelerate Link's adoption, as seen in 2023, when $1 billion flowed into Chainlink-based ETFs after the SEC dropped charges against the protocol. Gitto, a Solana-based MEV optimizer, also gained attention. Mert praised JTO for streamlining validator rewards via liquid staking, offering 7 to 9% APR, while reducing network congestion. Its partnership with Solana FM to integrate AI-driven analytics positions JTO as a hybrid between staking and machine learning. It's a model that could outperform Lido and Rocket Pool. However, risks persist. JTO's 60% crash in March 2025, after Solana's $1.2 billion in failed transactions, shows volatility. Investors should monitor Solana's uptime and validator concentration, as over 50% of MEV profits go to just 10 validators, creating centralization concerns. Speculative bets. SPX6900, Fartcoin, and the Memecoin paradox. SPX6900, a token tied to AI-powered trading bots, became a viral pick among Z-generation traders. Murad, a developer, dubbed it the currency of protest, reflecting Gen Z's rejection of traditional finance. SPX's $1.8 billion market cap in 2025 stems from its lid-driven liquidity pools, which adapt to market volatility. However, its 90% crash post-ATH in January 2025 highlights the dangers of hype-driven speculation. Traders buying SPX should set stop losses at $0.0114 and take profit at 0.111, mirroring the 300 to 500% pumps seen in BTC BULL during BTC rallies. Fartcoin, a Solana-based meme coin, also made waves. Launched in October 2024 after an AI bot named Truth Terminal generated goats memes. Fartcoin hit $1.5 billion in December 2024 before a 50% dump. Its allure lies in viral FOMO, but lack of utility beyond social media trends makes it a higher risk, higher reward play. Hodlers should allocate only 1 to 2% of their portfolio and use multi-chain wallets like Trezor Model T to avoid phishing attacks. Meanwhile, tokens like Virtual Protocol, which blends AI with DeFi, are a safer exposure. With $1.2 billion market cap and Coinbase listing rumors, defensive plays, BNB, XMR, and gold-backed tokens. For conservative investors, BNB and Monero remain stalwarts. BNB, with its Binance ecosystem dominance, benefits from $20 billion in quarterly volume and burn mechanisms that reduce supply by 10% annually. $600 price and 12% staking a PR on BNB Smart Chain make it a hedge against ETHS regulatory uncertainty. XMR, a privacy coin with $3.5 billion TVL, thrives amid IRS tax crackdowns and US dollar volatility. 75% of transactions untraceable. XMR is favored by Adam Back and Murray Rudd, who see it as a digital cash alternative. Gold-backed tokens like Pox Gold also entered the spotlight. Paxed 1 token to 1 gold troy ounce. Surged 15% after the Israel-Iran conflict spiked oil prices 7%. This aligns with historical trends. In 2023, gold rallied 30% during Fed rate hikes, and PaxG mirrored this with a $2,500 peak. However, regulatory risks loom. The SEC's stance on asset-backed tokens could limit PaxG's expansion. For traders, a break above $2,500 would validate a $3,000 target, while a drop below $2,000 signals panic. Hybrid strategies, leveraging DeFi, ETFs, and traditional stocks. Analysts like Alex Finevic advocate a diversified approach. His recommended portfolio includes Layer 1 blockchains and yield-generating tokens. Sevivic's framework suggests allocating 30 to 40% to Layer 1 South, 20% to DeFi, and 10% to memecoins, adjusting based on Glassnode's MVR-VZ score. For instance, Curve Finance, with $12 billion TVL and VECRV voting power, offers 8 to 12% APR, outperforming Frax Finance in stability. Meanwhile, Awawat urged traders to consider Robinhood and Tesla. Robinhood's 15M crypto users and Tesla's AI-driven blockchain patents position them as crypto-adjacent plays. Beyond BTC and ETH, the future of crypto investing is the shift from Bitcoin and Ethereum dominance to altcoins like STRK JTO and Virtual reflects a maturing market. While Layer 2, South, and privacy coins offer infrastructure resilience, memecoins like SPX and Fartcoin thrive on FOMO. Conservative picks like BNB and XM provide downside protection, and gold-backed tokens like Pax hedge against macro shocks. For our viewers, Layer 2 South, Starknet, and Zcash are bets on scalability and privacy. DeFi CRV and Link offer institutional-grade utility. Speculative, SPX and Fartcoin demand strict risk management. Hybrid, stocks like Hood and TSLA bridge crypto and traditional finance. What do you think? Will STRK overtake Arbitrum, or will memecoins like SPX dominate 2025? Share your views in the comments. Don't forget to subscribe for real-time updates and join our live streams, where we dive deep into charts, news, and blockchain trends. Remember, crypto investing requires research, discipline, and patience. Bitcoin and Ethereum may be foundational, but the next wave of gains lies in Layer 2, South DeFi, and AI-driven tokens. Till next time, may the market treat your trades kindly.